Stocks are on the move with investors awaiting news on U.S.-China trade deal negotiations. And our next guest believes that policy is at the heart of recent market action. And we're going to discuss that now with Alicia Levine, Chief Strategist at BNY Mellon Investment Management. So trying to get my head around the market right now and what's happening. And you think that the market's worried less about slower growth and more about the anticipation and benefits possibly coming from a Fed cutting cycle. Is that a good thing that that's what we're concentrating on?
It's a bit uncomfortable, but it's also familiar because we've already seen the manufacturing data roll over, not just here, but globally as well. And now the sentiment is rolling over as well. And last week, we just had the first hints of consumer confidence being weaker than expected. So we're starting to hit the consumer side of the economy, which, as you know, is 70% of GDP. So the question is, what's going to save this, right? What's going to keep us with a soft landing and not a totally downward trajectory? And ultimately, it's policy. And what the markets are saying is, if we get the sea of liquidity, if we get the Fed easing and we get ECB easing, and Australia's already eased, and now the Bank of England is dovish, and you've just had this global sea of liquidity coming from developed markets, central banks, we can replay that great rally that we had, since 2009, 2010. And so that's what the markets see. Whether they're right or wrong, that's what's going to drive this.
But did it concern you, Alicia, that we never really got back to parity, to neutral? I mean, that we wanted the cycle to play out longer for rates to go higher before we had to do this again?
Look, this is troubling, and it's troubling globally. So now, as you know, we're talking about the Japanification of Europe. There will be some price to pay here. This country, we do have rates, and we did get to neutral. It just turns out that with such a low inflation rate, neutral is just much lower than anybody had anticipated, and it's this really global downward, smashing.
And it didn't last long.
It didn't last long, right? I mean, look, when you think about it, the Fed was ready to raise in December. The Fed was saying the economy is so strong, we're going to raise twice in 2019. And a mere 6 months later, they're now talking about easing. So data can change quickly, and the inflation picture is just so low enough that neutral is lower than expected. You can't get any labor doesn't have any real wage pressure or bargaining power to get higher wages in this low inflation world. And so ultimately, everything's a little bit lower, growth included.
I guess the question is, if the Fed is going to ease so that we don't go into recession, is the market actually going to go higher? Because the market has now gone nowhere in 18 months. And I think
that's right.
Okay, it's a good 6 months, but the longer we kind of go on this trajectory, it's starting to get a little more painful, I think, than perhaps it seemed when the market was going up every day a few months ago.
Look, it's very true that for 18 months, we've pretty much gone nowhere. The only thing I'd say is that the highs have been slightly higher each time. So there is an upward trajectory still. And technically, the market looks pretty good. I think that the G20 is already baked in, meaning investors expect a détente and expect a pushing out of tariffs. So I don't think you're going to get much from the G20 by way of a bullish move in the market. I'd be you can't have a deal. I mean, ultimately, we're talking about the Huawei issue, and we're talking about the intellectual property issue, and we're talking about the Chinese enshrining this in their law. So this can't happen over the weekend. The best we can get is that would be a lot.
And you're saying that the market is ready for that.
We're ready for that. If you look at a basket of stocks in the S&P most exposed to China revenue, they've kind of rallied halfway back to where they were at the beginning of May, right before the sell-off happened. So you've got the semis reinflating. You've got all these China-exposed industries kind of saying, well, there's probably going to be a deal. Maybe it's the end of the year, but it's not going to be Armageddon.
Alicia Levine is the Chief Strategist at BNY Mellon. Thank you so much for joining us.
Thanks, guys.